What's up, everybody? It is November 2nd. That means the monthly market report from the Calgary Real Estate Board came out one day ago. Let's have a look. All right, so as we can see, total residential prices are still slowly going up. Detached is up, semi-detached is up, row is up, apartment is up, sales are up, new listings are up. Things are happening. It's a seller's market, big surprise. We all know that, okay? Inventory is down year over year, but as we can see in the chart here historically for this year, we're kind of seeing a trend. It's flatlining. A month of supply still historically low, but starting to pick up. Historically, this is when people start slowing down and the inventory starts to build up. Demand is still strong enough to eat up any product that's coming onto the market. Now here's where things get interesting. Follow along. Year-to-date sales for detached homes are down 20%. Semi is down 13, row is down 14, and apartment is the lone wolf that has netted more sales in 2023 than in 2022. Okay? Inventory for all four asset classes are down between 30 to 40%. Apartment down 22. Prices have all increased. So, from a lack of sales across the rest of the market, what do we know? There are fewer buyers. There's fewer people buying real estate. We know that. Inventory, historically low. What does that mean? Nobody wants to sell their house. They're holding on to that cheap 2.5, 3.5 interest rate that they've got locked in. But what do we know? In 2024, the CIBC released a statistic that 16% of its 5-year fixed mortgages are up for renewal. Okay? People are going to need to renew with 6.5% on their mortgages. They're going to want to move. What do those interest rates also do? Keeping buyers, first-time home buyers, on the sidelines. If there's fewer buyers and inventory goes up, we know that the prices for apartments have jumped. Rents have also jumped, but the price for those apartments are finally meeting what those rent levels are dictating the price of that product should be. So investors are going to finally slow down. So they're going to slow down. I suspect we will see balanced conditions going into the spring and summer of 2024. And as long as the Bank of Canada holds on to 5% interest rates, we will likely see the market turn somewhat towards a buyer's market in 2025. It's a long ways away, but one thing I know is the Bank of Canada is full of... They've lied about what they plan to do with interest rates before. I don't trust them. I suspect we will see anywhere between 4 to 5.5% interest rates for the next 2 years. You heard it here first. Now, let's look at what's going on in the overall province of Alberta. We are looking at the Q2 market forecast for Alberta, okay, released by the Calgary Real Estate Board back in the summer. Some interesting facts here I want to look at. Detached starts, this is construction on detached homes, are down 12%. Apartment is down 1%. Not crazy. It's about level. But we know demand for apartments is skyrocketing. Semi and row housing are the only asset classes here that have increased, which make up the least amount of the real estate market. Okay? So good for you. There's a lot more people building duplexes and infills in the city and townhouses on a case of affordable housing. As long as the detached housing starts stay down and apartment housing starts stay down, it's going to be an inventory problem. These starts need to double to meet demand if we want to lower interest rates. If you have questions, I've got answers.